Hey folks, this is another YouTube live for the Steady Trader. I've been on the road for a couple of days, so we haven't been able to do one of these in a couple of days. Obviously, what we need to talk about today is the Nasdaq 100. We've received a lot of questions over the past 24 hours, really, on what's going on. The Nasdaq 100 is over, and so I wanted to shed a little bit more light, and this is something I've talked to members and to the public and the media about really for the past couple of years, is that risk that once the Nasdaq 100 stops going higher, and whenever that is, this is an if not, it's an if and when as opposed to an a right now. We need to be aware of the consequences of that. We've seen a couple of outbursts, a couple examples of that over the past year and a half, 2 years already. So let me just quickly give you a quick reminder. So first of all, let's have a look at this chart here, or this makeup here. This is the Nasdaq 100, okay, the QQQ ETF. And if you add up the top 4 holdings, and again, this is nothing new. I've talked about this now for, I don't know, I think 2 years. If you add up the top, so 4 or 5 holdings, Apple, Amazon, Microsoft, and Facebook, throw in Alphabets, I mean, you are well into the 40% makeup. So 40% of the Nasdaq 100, which is made up of just a few stocks. So that's number one. And that, of course, does have the, that bears with it the risk that if some of these stocks stop going higher, if they have meaningful down days, like, for example, Facebook had yesterday, which we'll get to here in a second, that weighs not just on the Nasdaq 100, but on the entire broader market. Apple and Amazon are both, sort of trying to get to $1 trillion market cap. Crazy numbers. And so from that perspective, keep in mind how large these stocks are. So let's flip this thing around and look at 2 charts. This number one chart here is this one here. And what this chart is the Nasdaq 100, again, the QQQ ETF. Let me just make this straight so it doesn't get too shaky for you. But what you can see here is this is the 2016-2017 uptrend of the Nasdaq 100, and we obviously have been overshooting. We once overshot in January, then we mean reverted back down to the middle, and now we're overshooting again. All the while, momentum from a MACD perspective, which is our moving average convergence divergence, is basically at an all-time record high. If we keep this in perspective and now look at something like a daily chart, you'll see that here over the past few days, we have seen a bit of a reversal that I think is certainly worth respecting. So let me show you this chart here, and that's this one. Okay, so this is the daily chart now. What you can see, we had an outside reversal. I believe this was the 13th of March, so just a few days ago last week. And we had follow through selling that's yesterday. So this is yesterday, the 19th of March. Again, I'm not saying this is a time to freak out and sell everything, but you're seeing here that from a daily chart perspective and on the weekly, things kind of line up, and then take this into account. So now, one thing we haven't talked about is Facebook is, 5% of the Nasdaq 100. And so essentially, now Facebook isn't the largest stock. Like I said, Apple and Amazon and Microsoft are much larger in terms of the percentage. But still, if one of these things drops, and keep in mind, a lot of investors and traders basically trade these things as buckets, okay? So they're not trading these things sort of idiosyncratically. They're one bucket, like the FANG stocks, I guess is what they're looking at. So in addition to that, something like Facebook with the legislation issues that yesterday were potentially coming up, where some people were saying, you know what, if Facebook's going to be more sort of restricted in terms of, or sort of better oversight is needed for them, then that's going to be the same thing for Google, maybe Amazon, so on and so forth, and that will weigh in the entire market. And again, that wouldn't be as important to the broader market if it wasn't the case that these stocks are so damn big, and again, such a high weight, not such a heavy weight, not just in the Nasdaq 100. But also in the broader market. Like, this is a nice, I think this is Morningstar has a very nice way of visually looking at this. So these are the largest stocks in the Nasdaq 100 by bubble. So the larger the bubble, the heavier the stock, the weighting. And you can see the massive weight of Apple and Amazon, Microsoft, and then in here is Facebook. So, it doesn't take more than 1 or 2 of these stocks to drop to not only put the Nasdaq 100 under pressure, but also the entire stock market at this point. So this is a bit of a cautionary, and I hope this is helpful for you guys. Give us a thumbs up, like if you enjoyed this, subscribe to the channel, let everyone know about this, and I'll see you guys in the next YouTube Live.